Hello everybody, we are the Northshorist Real Estate Group and we bring you hyper-local real estate, community, and lifestyle services. Today we're joined by a special guest, Sean Gaudreau of Guaranteed Rate. Welcome to the program.
Thank you, Patrick.
And we brought him on because we're going to talk about a little bit of the Fed's tapering program. We're going to talk about, obviously, over the past several years, since kind of the economic collapse, they have been buying up treasury bonds and also mortgage-backed securities. And they have finally kind of announced, they did it middle of last year, they announced that they're going to taper that process off from the, I think it was $80 billion that they're buying right now, slowly kind of $10 billion less over the next couple of months until the end of the year, no longer buying any kind of bonds or mortgage-backed securities and kind of leaving the market to be on its own. And what that affects with the real estate industry is really the interest rates that you're going to get for your loan. So this is kind of what we saw last year. You can see during the middle of the year, we really saw that huge spike. Sean, can you kind of talk about what happened there?
Sure. So what was happening was the government was getting frustrated with the fact that the economy seemed to stall, and it really wasn't improving. So really there's two pieces of ammunition that the Federal Reserve has that they can use to get the economy really up and going. First, they can lower interest rates at the central bank, which is essentially the rate at which larger banks borrow their money, which trickles down to mortgages and car loans and student loans and our everyday life. Now, they had done that for years, and it didn't really have as much of an effect as they had liked. So what this
can't lower it more than zero.
Yeah. So what they started doing was quantitative easing. Essentially what they're doing was printing money and buying an astronomical amount of mortgage-backed securities and government bonds, which it frees up money and makes it much better for banks and much more lucrative for them to lend the money, and it's their attempt at getting the economy going. Now, obviously, like Patrick knows, you can't do that forever. Yeah. So now that the economy is showing some signs of growth, they've started tapering. Now, tapering is really just them buying less of these bonds and assets that they were before. And as you can see from this chart, and as me and Patrick see every day, when the government and the Federal Reserve isn't keeping interest rates artificially low, rates are going to rise across the board, which is clear when you look at charts for mortgage rates.
Exactly. And you see this giant spike in the middle. And that was really when Bernanke kind of announced that they were going to start tapering. And we saw it, we were talking about a little bit before we started the video, it was basically like a weekend or maybe a week where he announced it and then rates just kind of shot through the roof.
Yeah, the frustrating thing with mortgage rates is all it takes is one piece of economic news, such as Ben Bernanke, who's the chairman of the Federal Reserve, to come out and say, we're tapering, we're not going to keep buying this many bonds forever. And interest rates literally jumped a half, 3/4, I mean, in some cases, almost a full percentage rate, literally overnight. And the frustrating piece of that is interest rates tend to go up much faster than they come back down.
Exactly. So let's see how they're kind of projected to go up over the next year. So this is from the National Association of Realtors and also the Mortgage Bankers Association. They see it kind of going up about a point from where it is now over the next year. Do you think it'll have that immediate increase like we saw last year, or will it be more a steady flow over time?
That's a really good question. A lot of people ask me what I think interest rates are going to be doing, and my general answer is if I knew what interest rates would do every single day, then I would most likely be retired living in the island somewhere. But if you look at history, and history, as you know, tends to repeat itself, at this point last year, rates were at, say, 3.5%.
Yeah.
You look at interest rates this year, we're in, low to mid 4s, so about a full percentage rate up. You look at these projections, which is a year out from now, and it's the same trajectory as what we're already seeing.
Exactly.
So if history repeats itself, we will be in the low 5s.
Exactly. I mean, the one thing we do know for sure, right now they're about 4.5, maybe a little bit lower. So if you're out there looking to buy a house, now is really the time to jump on it. The spring market should be epic, to say the least. A lot of new buyers, a lot of people that can finally be able to sell their home are coming on the market and looking for something new. So, as always, if you like our videos, please subscribe to the channel. And remember, we're not just agents, we're Northshorist, just like you.